Hi, this is Laurie Letzo. I am your QuickBooks Online Biz Insight guide. Yes, so I am here to help you understand QuickBooks Online basics with accounts receivable. Accounts receivable is money that you receive from your customers. Okay, well, let's get started. This is going to be a two-part series. After the second part, so in about 15 minutes, you will have a better understanding of accounts receivable and how it affects your business and money coming in and how you record these items. And let's get started. All right. So I am in a sample company here in QuickBooks Online, and it's Ann's Advertising Agency. All right. So what we want to do is, the first thing we're going to do is we're going to look at creating an estimate. Now, what an estimate would be like a quote. All right. So let's click on Create Estimate. I'm going to type in New Great Customer. Okay. And the information comes up. All right, we've got the date. And again, remember, when you see the word estimate, it also means quote. All right, so if you're an advertising agency and you're quoting your media services, you're going to put in the information here, the date of the quote. All right. And okay, you can put in that rate, 125, we will say 3, okay. And then you're going to click Save and Close, okay. Now we want to go back here up to our plus button, hit Create, and we're going to create an invoice. Okay, we're going to type in that customer, New Great Customer, and it's automatically going to show us that we have a quote out there, an estimate. Okay, so now we have a choice. We can ignore that quote and just put a regular invoice in, or we could go ahead and open up that quote and we can change it. Or, so let's see, for example, we want to add a line. All right, we're going to add a line here. And our customer has told us that they will be needing more services from us. And that's going to require more time. So we'll put that extra time in. Okay. So now we have the invoice, the estimate, the quote, the way that the invoice should look. This is the agreed upon agreement. All right, so we're going to save this. And then from here, we're going to create the invoice. Okay, so we'll click that button, Create Invoice. And this basically brings in everything from the quote. So the only thing here is we just have to fine tune perhaps maybe the terms. Maybe we agreed on net 10. So as soon as they receive the invoice within 10 days, we are expecting payment. Okay, so that is reflected here in the due date. We're going to come down and we are saying, okay, this looks good. So we are going to save and close it. All right, now we want to say, well, where did the quote and invoice go? An estimate has no effect on your accounting books, other than the fact that there's numbers in there, but they're not part of your final numbers. In other words, they are recorded in your system, but they're not recorded in your accounting records. So you can have perhaps 1, 2, 5, 10, as many quotes as you want. That's not going to muck up your records. You get to choose which quote, if any. You can leave the quotes out there. All right, so I just wanted to be clear about that. Now, we have taken that quote and we've turned it into an invoice, all right? So now we want to say, where did that invoice go? We're going to come over here, looking at our reports, and we're going to go to Accounts Receivable Aging Summary. All right. And now we'll see here, New Great Customer. Stands right out. Now this is also a record of everything else in this sample company of customers that owe us money. Let's say we had another conversation, and before we sent out this invoice, we wanted to make sure that we had everything just the way we wanted it for this particular customer. So the thing that we love about QuickBooks is that you can basically click on these fields and you can double click and it will drill down and jump you into the place where you need to be. All right, so for this particular instance, we're drilling down on our new great customer and we want to see the invoice, and we just want to take a final look at everything, and everything looks good. Okay, perhaps we might want to add an attachment of a contract that we signed with them. That's a really, really good feature to have for your records, and it's great for when you're doing sending the work to your accountant. Okay, so we're going to close that, and I just want to show you. So that's where the information goes. It's in accounts receivable, meaning you are, as a business, you are receiving that money. Okay, you will be receiving that money. Okay, now let's talk about you are receiving the money. It's been 10 days, and this new great customer is doing great so far. So we're going to go up here to our create, and we're going to receive the payment. All right, we'll type in our customer's information here, and they paid us by check. We'll put the customer's check number in there. Click on the invoice that they're paying, and we will save and close. Before we do that, notice over here, undeposited funds. That's where it's being deposited to. That's very important because this is part of the cycle for invoicing a customer. Okay, save and close. The three things that I want you to remember, the three big things for invoicing a customer is invoice, receive payment, and create bank deposit. Okay, so let me show you that. The estimate is optional. You do not have to do that. That's a quote. If you do not use quotes in your business, leave that step out. The three steps, the three main steps are invoice, receive payment, and make bank deposit. Okay, so now we're going to receive payment on that invoice. Actually, we already received payment. Okay, so let's come back over here, and we're going to make a bank deposit. Okay, and we're making the bank deposit the date that we received the money, on the 27th. We will click on that deposit. And if we had any other deposits that we were taking to the bank, any other checks, perhaps we had 4 or 5 checks that we would be taking to the bank, depositing perhaps on our mobile banking app, and the bank would group those as a batch, and then our bank statement, it would show us one amount as opposed to 4 or 5 different amounts. So in this case, we just have one amount. We're going to save and close that. Okay, and then we see here it is not on our accounts receivable aging summary report any longer. It's not there because we received the payment. Okay, so we can close out of here, and I want to bring you back to that customer. So we're going to go over here to sales, go to our customer, and then we're going to type in new great customer. This is our find feature. And it's going to show you the information that's associated with this customer. Okay, so this is the 3 items that we did today. We added a quote, and then from that quote, we converted it to an invoice, and then we received payment on that invoice, and then we also show that we deposited it into our bank, which is very important. You can't forget that last step. and it shows the date of the deposit. Very, very important for our end of the month bank reconciliation. Okay, great. So that is the overview. There's more details always in these in the adventure and journey of invoicing your customers. But that's the basic overview. On our next video, I want to show you other methods of recording money that you receive from your customers. Okay, so stay tuned for sure. And let's see here, you are back. All right, so if you have any comments, questions, or you have any other suggestions for down the road for future episodes of what you'd like to hear about, learn about with QuickBooks Online, basic understanding right now, that's our series, please feel free to drop me a line and we'll definitely get back to you. Okay, so thank you for allowing me to help you with your businesses, and we will see you soon. Bye-bye.